G'day guys, Ben and Simon here. Welcome to another episode of the Pumped On Property Show. Now, in this video, we go into what we believe is going to be one of Australia's top performing markets in the next 15 years, and what we also believe is one of the most undervalued markets in Australia right now. Melbourne is at the bottom of an 8-year low, and we like it.
Absolutely. We look at the history of the Melbourne property market, a very long-term history to kind of educate you on what it's historically done. And we talk about why it's underperformed so much over the last 5 to 8 years. And then some of the cool things happening down there, like the amount of public and private spending, the amount of people moving to the area at the moment, and obviously what we love about it based on the data that we're analysing at the moment.
And then, as always, we take that bigger picture view in terms of what some of the greatest analysts in Australia and the greatest data collectors in Australia are saying about the market moving into the future. So it's certainly a good one for all of you guys out there looking to really wrap your head around the history, the present, and the potential future of the Melbourne market. And I actually really enjoyed recording this one. So you and I recently worked with a friend of mine who's a coder, Craig. Now he's been working for some pretty big dogs over in London for the last 20 years. And I caught up with him, and you and I have been trying to aggregate Australian property data for a long time. So he helped us pull some data, which is absolutely phenomenal on a real-time basis, which effectively allows us to look at the 19 biggest markets in Australia. Now, I don't want to get the numbers wrong. So 4,087 suburbs to be exact across Australia's 19 biggest capital city and regional markets. And generally on a daily basis, we're getting about 65,392 data points to be exact. Now, what that enabled us to do, and I'm sorry to go straight into the data at the start of the potty, but it's enabled us to see things that other people aren't seeing in the market. It's looking at Darwin versus Perth versus Wollongong versus the Central Coast versus Geelong, and then every single suburb within those markets within 60 k's of the CBD point, and being able to rank one city directly versus another, or one part of a city versus another, or even more importantly, every suburb in a city or regional market against the other. And it was the day after we got the data where you and I looked at Melbourne, and you said, is something wrong?
It's like a light bulb moment.
You said, the data's wrong in Melbourne. And I went and got him to redo the data, and he's like, the data's not wrong. And I went, but everyone in Australia has been saying that Melbourne is the same as Sydney for the last 12 or 15 years. And it's extremely expensive. And it is, like, Eastern Melbourne is so expensive. Like, it's equally as expensive as Sydney for the same stuff. But I just didn't realize that Melbourne wasn't one market. Melbourne is actually 5 sub-markets, and 3 of them look good.
3 of them do look really good, but even still, some of those areas in the east and down in the southeast, like for like comparing it to a Sydney, because these are the 2 markets with similar populations. Like, what is it? I think Sydney's roughly 5.1 million. Melbourne's roughly 5.2 million at the moment. Not exact, but somewhere in the vicinity. And then in terms of like land space as well, relatively comparable cities there as well. So like for like, it's still significantly more affordable than Sydney. Now, it's hard to compare because like the natural beauty that Sydney has is just unrivaled by anywhere in the world.
Yeah.
Like, all you got to do is fly into Sydney, and you just realize like the harbour, the beaches, the cliffs, everything is just insane, and it's not rivaled by anything in the world. But Melbourne, the beautiful thing that it has is like a lot more flat land. And you look at this on Google satellite imagery, and you can see there is a lot of farmland on the outskirts of the Melbourne city. But what that enables it to do is have much better infrastructure. So if you compare like the public transport network in Melbourne compared to Sydney or Brisbane, where you do have more waterways and more, I guess, hillier zones, it makes it so much more challenging to bring that infrastructure to the market. So like when you look at how long it takes you to get to the CBD from your middle or outer ring suburbs, it's a lot quicker down in Melbourne as well. So it makes it a more accessible city. And this is probably why it continues to get rated in the most livable cities globally.
Yeah, like I think it just shocked me that I should have known better, right? Because I knew when we were buying in Sydney that Sydney was not one CBD.
Yeah.
There was the city centre, north, south, east, and west. There was beaches, there was inner city, there was fringe suburbs, and then there was outer. And we knew that about Brisbane as well, buying it over the last 10 or 11 years. But yeah, Melbourne is red hot right now. Now, I've said on the title that it's the most undervalued capital city, but statistically it's not. It's the second most. But I just want to clarify that Darwin looks insane, but Darwin doesn't have 160,000 people a year moving there. Darwin isn't known globally as the second place that you'd move to in Australia if you're coming in from overseas, if you can afford to be there. Darwin doesn't have the infrastructure or the insane beaches of the Mornington Peninsula or Geelong or the beautiful Bayside suburbs where every person's earning $1 million per year.
Yeah, and it's like one of our colleagues and good mates, Josh, he grew up in Darwin as well, and he's like, for 6 to 7 months of the year, it is just hell up there. Like in the wet season, it is just hell up there, and nobody wants to be there, and it's, it doesn't make it livable. Plus, economic diversity is very low. You don't have the ability to go get any job in any industry up in Darwin because it equates to less than 2% of the Australian population, where Melbourne is around about 20% of the Australian population. So, you can't compare Darwin versus Melbourne. And when you look at the long-term history of Darwin in comparison to Melbourne, like it just doesn't stand up. It doesn't stack up. So it's like you got to choose your battles, right? And it's like we're always the guys that are going to talk about your major metro markets, your major regional markets, because we want consistency, stability. We want to lower our risk. And, I feel as though with the boom and bust nature of Darwin, it just creates a bit more fear for me as an investor. And obviously, if I have that fear, I can't tell anybody else to go and do something that I wouldn't personally do myself.
Yeah, like it's going to be the top market in Australia this year. It's
Oh,
clearly the
and
top
next,
market.
I reckon.
Yeah, and it is coming off a 10-year average of 1.9% per annum, which says to me that it's about 60 to 80% below where it should be. But I just can't go put my money in there.
It's not that cheap either. Like, yes, you're buying a lot closer to the city, but I was having a look up there just because I was interested. And, to get a decent property in a decent suburb within sort of 10 Ks from the city, you are looking at least 600 grand these days.
Yeah, so if we take a step back and we go, let's break this down into the history of Melbourne, the current situation, and then the potential future. And then we'll talk about just why I and you like it personally.
Yeah. So I guess like first thing we have is John Lindemann's book, where he looked at 100 years worth of real estate data in Australia, and it indicated that the average property in Australia went up by about 11%. That's kind of the longest average that we've got. Then there was a study done from Successful Ways or Homely that looked at capital growth rates from 1970 through to 2016. And if you add up the total return and divide it by 46 years, it spat out 9.5% per year down in Melbourne as well. And then we've got the information from Simon Priestley where he looked at 50 years worth of property data, and that indicated about 8.2% per year for Australian property as well. So long-standing history of kicking ass down there.
Yeah, like we've got, I suppose that's the first thing to know, like as a foundation of, as an investor, that Australian residential property, according to Simon Priestley, has been consistently one of the best performing assets in the world leveraged over the last 50 years. And then when you sort of start getting down to Melbourne, between 1992 and 2022 in Melbourne, it was actually Australia's top performing market over that 30-year period. I think it did 459%.
I like that too, because that's the most recent history that we've got as well.
And what that says to me is, the convos I'm having at the moment is, why would I buy Melbourne? When I look at the comments on our videos that we put up about Melbourne, it's kind of like, why would you look there? There's issues with stamp duty. There's issues with land tax. 300,000 people left the city. They locked everyone down in their homes for 2 years. Like, it was the worst. The way that they dealt with COVID was like, now
Worst practice.
there's probably going to be one of those train wreck Netflix docos on how they did Melbourne through
Seriously
COVID.
though, it probably will.
Like, it is that bad a thing.
The fact that it got rated the worst city in the world, like worse than being in Wuhan. Like that is
It's
just
Wuhan. It
that's
sounds
that's
hectic.
where COVID started.
Oh yeah, China.
In
Okay.
China. Like that's where it all began. And like I remember watching the things unfold in New York City as well, which like just looked horrible. And still, Melbourne got rated worse than that during COVID as well.
Yeah, like that's that's
As bad as it gets.
that's part of what people flipped out about down there. And the Queensland and Perth markets got the absolute benefit of that. Like
100%.
300,000 people left to here in Perth, and it doubled prices in both of those
Yeah.
markets. Now, when we look a little bit more at the long-term history before we get into where things sit today, probably the best piece of info we both got recently was from CoreLogic. I think you sent it through to me. And it looked at Melbourne and Sydney over the last 30 years comparably. And over the last 30 years, the average between Melbourne and Sydney has generally been about 29%. Sydney, Sydney is Sydney.
Sydney. It's
There's no
always
other
been the most
Sydney.
expensive. It always will.
And then right now, Melbourne is sitting at 60% below. So even with that, we're sitting at a 31% difference in like the historical 30-year average.
On top of that, like Melbourne generally sits as the second most expensive capital city in Australia.
Yeah.
There's periods like where we are right now where you will see Brisbane, Canberra, Perth maybe take over, but right now it's Brisbane, Canberra, Perth, Adelaide, and Sydney are all more expensive than Melbourne at the moment. And when you look at like for like, so same proximity to the CBD, same, asset type, like I would say that Melbourne's about 100 grand cheaper than Brisbane is today, like for like, but Melbourne's got 5.2 million to Brisbane's 2.7 million.
Without a doubt. And Melbourne's got, so if we come forward to today in terms of some of the reasons we like it, according to the ABS, there's 160,000 people a year coming into Melbourne, and that is expected to continue for the next 5 years or so, which takes Melbourne to almost 7 million people. And then you and I think you sent it to us, or Jody did in the team, 24 years from now, they're saying that Melbourne will be the current size of London. Which is
Crazy.
insane to think about. Like London just has that
Yeah.
feeling.
Yeah.
It's just exciting, like that sort of population growth. And I think about it like we work with people from all over the world, India, all through Asia, America, and Europe. And in the old days when Melbourne and Sydney were the same price, like the people that we're letting in at the moment aren't asylum seekers and refugees. These are people that are coming to Australia for a better life, that are earning 100 to 300 grand a year as a household. And if you're going, well, I can move into like Kellyville, Homebush, the Hills District, 20 to 45 Ks from Sydney, and I'm paying 1.2 to 2 million bucks, versus moving into like West or North Melbourne for 600K to a mil. People overseas talk to each other, like where to go get the opportunity. The job markets are equal. The incomes are completely equal. And if I was coming in with my family of 3 kids, earning 300 grand a year, I'd be going straight to the place that's literally a third of the price for the same thing right now.
Absolutely. And it's like they're developing nice little communities there, and the commute time to the CBD is nothing. Like even in Melton, which is like 40 Ks to the west of Melbourne, you can get from Melton to Melbourne Central within like 55 minutes via a train, one train line straight across. And it's like so commutable, so realistic for people to be able to justify. And that's an area where you can buy a house still for 600 grand.
Literally like 600K, a townhouse for 420K right now. So what are some of the cool things that you've been hearing about the Melbourne market at the moment? For example, just fully throwing you on the spot, but as an example, any cool infrastructure or, vacancy rates or some of those like softer things that you like about it?
Yeah, like I always like to know how much money is being spent, and there's roughly around like 20 to 25 billion dollars being
Wow.
spent annually on infrastructure throughout Victoria, with the vast majority of that being focused in the Melbourne city as well. There's only one reason why they would spend that money or be able to budget for that amount of spending, and that's because they need to facilitate the population growth that they're expecting. So
Thankfully, Queensland and Perth have stuff underneath the ground that's keeping that ship afloat for Melbourne right now.
that's right, exactly.
Yeah.
The other really cool thing that we just read, which was an article from Property Share Market Economics, is Amazon's just acquired a bunch of real estate in North Melbourne, in Craigieburn, to build one of their data centers as well.
Stop it.
Yeah, I can't remember exactly how much. I think it was like 12 to 15 hectares of land. And they paid more than double the amount for that vacant land than the previous industrial investor that bought the same amount of land in that space. So like they've just come in over the top of everybody else and just gone,
We need it.
we need it, and we're willing to pay double more than anybody else is willing to pay. So, you know, if Amazon is seeing blood in the water down there and they're needing to build a data center that close to the city, like you can naturally assume that all of those areas around there are going to spike off the back of it as well, because jobs are going to be created. Well, how many jobs? Probably going to be mostly robots in the data center. But
I don't know. I don't know. I used to work in the data center at IBM in the northwest of Sydney. And when I say
many
worked,
years
I
ago?
went twice. And yeah, it was empty and it was sort of scary in there. It was actually like I
I'd
was just walking
imagine.
through like rooms and rooms of servers, like disk, like it was going from server to virtual. And I was like, I didn't know what I was doing.
Oh,
But I was walking through with a few
spooky.
people that did, and it was dark and noisy and hot, and I was just like, this is not for me, eh?
But
But
yeah,
the creation of those centers is important.
exactly. So I think like the fact that like big business are going in and acquiring, you know, bucket loads of real estate, the fact that the government's spending so much money down there at the moment, and they're just apparently not building enough homes as well. Like this is a difficult one because I don't know how accurate the information is, but according to Michael Matusik, they're indicating that they're currently building about 60,000 homes per year. And I was just reading an article this morning from CoreLogic or Cotality. I've got to get used to saying
Yeah, me
Cotality
too.
now. That over 60% of Australian households have 1 to 2 people living in them.
Okay, so you know, if there's 160,000 new people and they're only building 60,000, with that maths, we're short. But then Phil Anderson would say there's all these shadow properties like the Airbnbs, the empty places, and etc. etc. etc.
Yeah, and you know, let's see what happens as time goes by. But we're looking at the vacancy rates and tracking them every single month. Like that's one of the data points that we analyze, and you know, vacancy rates are dropping in Melbourne. They have been for like almost 18 months now.
Yeah.
And rents are on the rise as well. So you know, that only happens when there is more demand for rental properties than there is supply. So there is a correlation there. It's just, you know, how many new developments are going to be brought to the market. So yeah, there's some of the things that keep me excited, because like there's big money coming into the market. There's lots of people moving there. They're not building enough properties. They don't have enough rentals at the moment. So all of these things are a surefire. And I guess the thing that I love most about it is just when everybody is talking shit about it and is finding reasons not to invest, or finding reasons as to why they would badmouth it, that to me is just like, oh, cool. That means people haven't yet realised how undervalued it currently is.
You know, I remember growing up in Sydney, and as far as I felt, it was kind of like Vaucluse, Rose Bay, and then it was kind of like the northern beaches, the eastern beaches, and then it was just everything else was whacked in with like, you know, you only move there if you can't afford to live anywhere else, which is everyone.
Which is everyone, right?
And then, you know, now eastern beaches, all of the inner west in every direction's great, the CBD, the northern beaches, and then the middle ring suburbs are phenomenal. Like we've got clients living in Penrith that are sitting on $1.45 million houses that can get to the city faster than someone living 20 k's in the city now because of the key infrastructure that's been put in. And Melbourne's kind of one of them. It's got East Melbourne and the Southeast Melbourne beaches, as well as the inner north, that are so expensive it's not funny. Like I can literally look on the map and go, this suburb here, 5k's from the city of Melbourne, is 2 to 5 mil, and this suburb 4k's further is literally a quarter of the price. And I can go down the eastern beaches and I can go, well, everyone knows St Kilda, so I'll say that, which is, and then we go southeast to Brighton, where we've got clients living there in $5 million homes. And then you go all the way down the Mornington Peninsula, and some of the most expensive homes in Australia are in Sorrento and Portsea. And then there's just this monster gap on these beaches of just literally 20% of the price here and 10% of the price there in the middle. And I look at those things, or we go out to like what I'd classify as like Western Melbourne, South Western Melbourne, and you've got suburbs that in Sydney would or Brisbane would be considered west because they are 40 to 60 k's from the coastline or even from the city. And in Melbourne, the west actually is like just down the road from the beach. And it's a very, very different west. Yeah, there's like infinite land out there. But they have drawn like a circumference around the city of Melbourne, 60 k's or whatever, and gone, well, this is going to be the future of Melbourne. And when you look at Amazon coming in and spending that sort of money in Craigieburn, 24 k's in the city, and Craigieburn would be considered, for example, north, and that would be 300-400k more expensive than the same distance out here in the west. That's the stuff that gets me excited. Like, they used to underprice Brisbane and Sydney the same way, where like areas that had bad reps were super cheap. They don't now. Like, everything's sort of even. But in Melbourne, we're still seeing like hundreds or millions of dollars of difference between like perceived quality parts of the city and perceived shitty areas.
It's wild. Like, even in the southwest, like you look at like Williamstown, and then you go down to Altona Meadows, and then you jump across the river and you're in Point Cook, and there's such a disconnect because of the one river that separates the two at the moment. Like, you can still buy a kick-ass house in Point Cook for 800 grand. You go over to Altona Meadows, Altona, it's like 1.2 to $2 million. You go to Williamstown, it's like you're not finding anything for under $2 million as well. And they're all relatively close to one another. But then you just go maybe 5 to 10 kilometers west of the water down there. And no, it's not as nice as the east. Like, let's be honest, they haven't developed it. They haven't put in like nice walkways. They haven't put in anything, to make it a bit more beautiful. So that lifestyle needs to increase, and they need to develop the shoreline there to make it a bit more usable for sure. But when they do that, it's just going to add a huge amount of benefit to it as well. Like, I remember when we started buying in Redcliffe, like, they didn't have the walkway from like Newport all the way down to Clontarf, essentially over to Brighton as well. But now you can, walk, bike ride, whatever it might be along that whole run. And same here up on the Sunshine Coast. It's like now you've got the walkway from basically like Golden Beach all the way up to Bedina, and then you just got to come around and then you can go much further as well. So like, as things improve, they're going to increase the quality of those lifestyle factors, which is what West Melbourne is currently lacking, in my opinion.
I like that. So in terms of where I see value in Melbourne, because we've looked at all of the suburbs within Melbourne, and like we do, we've reduced it down to a couple of suburbs, a couple of pockets that make sense. I do like North Melbourne, although we're not currently buying there because it's very, very hot. I like Northwest, West and Southwest Melbourne a lot. And I like the southeastern beaches on the way down to the Mornington Peninsula. And they're the pockets that we're currently focusing on. And I'm not losing properties down there to investors. Like, I'm not actually competing with investors at all. Everything that I'm losing to right now, whether it's at auction or just on the weekend, is mums and dads. What you'd normally see in like affordable parts of these cities around Australia, whether it's Perth, Adelaide, Sydney, whatever, is the further you get from the city, the higher the percentage of renters, the lower the average household incomes, the higher the crime rates. But what we're seeing in some of these parts that are considered shitty parts of Melbourne right now, which in 10 to 15 years will have potentially doubled in value, is insanely low vacancy rates. Like, Melbourne last month in our market update was at 1.8%, which is chronically undersupplied, but some of these suburbs are well below that. You've got incomes in most of these areas, even back in the 2021 census, of well over 100k per year. I'd love to see what they come back after the new census is done. You've got 20, maybe 30% of the people living in the suburbs renters, but that means 70 to 80% owner occupiers. And you've just got, as you said, billions of dollars worth of infrastructure going into that Western corridor, whether it's that Western Link project, the new metro line, whether it's new train stations, upgrades to existing major roads. And as you said, like, it's not there yet. And neither was North Brisbane or South Brisbane or West Brisbane 11 years ago when we started to buy them. But now that the rising tide lifted all the boats and the domino sort of fell one suburb after the other, I think some of these joints that we're buying for like 600K to 750 blow my mind. Like if they were Sydney, 1.2 to 1.5 in any one of those suburbs right now.
Yeah, and Brisbane and Perth, they're sitting at roughly around that $700,000 to $800,000 price range at the moment as well. It's really affordable, and it's no wonder as well. Like yes, they did have the mass exodus out of Victoria. They did have a change in policies as well, and it's very pro tenants down there. Like it's not all sunshine and rainbows, but generally when you're at the bottom of a cycle like this, you're going to see a lot of these barriers to entry, let's just call it that.
Yeah.
And
red tape,
that's it. So it's like it is very pro tenant, so you need to make sure that you've got like a modern low maintenance property as well, because otherwise you'll be spending tens of thousands of dollars on getting it ready to rent for what you currently can do.
Have you even seen a renovator in Melbourne? Like the thing that blows my mind is every
in
house
Southeast.
in the south. Yeah, true.
Down at Frankston, there's a couple.
If you were in East Melbourne,
Yeah,
they're all renovators.
But that's because it was developed, however many years ago.
In the West, like they sell them painted with new flooring, new blinds. For some reason, they made like you have to have ducted air conditioning in a Victorian property.
I don't understand that.
So all of these like 30-year-old properties have had these, $10,000, $20,000, $30,000 air conditioning units put in.
Seriously.
Most of them have half done or brand new bathrooms and kitchens. Like it actually blows my mind the quality of the property for the value and price you're buying them for.
Exactly. And I think like rental yields, everybody said that it's really bad down there, because it is the most affordable city in Australia to rent in right now. But it's not too bad. Like we're seeing those properties that we're buying for like 700 grand, they're getting rented for around the 550 per week, 520 to 550 at the moment. So once again, like for like, it's similar to what we're seeing in Brisbane at the moment. Not as good as Perth, because Perth has the mining money and extremely low vacancy rates at the moment. So it's quite normal to see that. But I think everybody just suffers from a bit of recency bias in Australia as well. It's like, oh, for the last, 5 or 7 years, Melbourne's been underperforming. So that must mean that Melbourne's a bad property market. But that's just not the case. You need to go further back, have a larger sample size to actually get an indication. And when we look back at the way markets move around Australia, you can clearly see that like people eventually get fed up with how expensive property prices are in Melbourne and Sydney, because they're the two markets that lead the cycle. And then something happens, a new sector will pick up, like mining or something like that, or a big shock to the system, like COVID's the most recent one, where people be like, I just want to get out of the big capital cities, and I'm going to move to Queensland, I'm going to move to South Australia, I'm going to move to WA. And then all of the money gets taken out of Victoria and New South Wales and put into these other states. And then, time goes by, people realize that like, oh, I miss my family, or, that job wasn't all that I thought it was going to be. Like the grass isn't greener. I'm going to move back down there. And, you see the money move around Australia, and it's pretty common to see this happen, where you'll see like thousands of people move out of Victoria every single week, and then you'll see thousands of people move back in every single week when the opportunities do present themselves, because everybody's got to put a roof over their head, whether it's a rental or your own home. Everybody wants to live in a nice, safe neighborhood. Everybody wants to have access to different employment opportunities, good education, good healthcare. And so if there's an opportunity to save a bit of money to do that, people are going to do it.
I like that. Like, I think that's really important what you just touched on. Like, it's not all just sunshine and rainbows down there. So some of the things that are keeping people out of the market right now, and that's why Darwin and Brisbane are going to smash the short-term performance of Melbourne. Like, if you're looking for a winner this year, there's other markets. But if you're looking for a 7 to 15-year winner, like, this is the one. But vacancy rates are a bit higher down there. 300 or so thousand people did leave the city. A lot of people that live down there, because we work with a lot of people that live there, and they're like, we don't want to buy here. And there's like this sort of like scarring from COVID that it really hurt people. Like people with families got stuck indoors for 2 years. It wasn't well managed. Like right now, stamp duty's it's expensive to get in. Like it's at least 25% more expensive than Queensland right now for stamp duty.
I was just having a chat with a client from America this morning, and he was saying, what's the difference between Queensland versus Victoria? I'm like, well, let's look it up online because it's that quick these days. And we put in $800,000 investment property. It was $33,000, just under, to get into Queensland in stamp duty, where it was $45,000 in Victoria for the same $800,000 property. So, $13,000, that's a lot of money.
Big money. And that's come off the back, right? Like people need to understand that if it wasn't for Queensland and WA, and if that was its own standalone country, like it would be broke right now, Victoria. Like the government was so poorly managed that it went into unlimited debt, and it still is. And it's only because we're a nation that the revenue from mining is going back. So what can the government do? They had to increase stamp duty, and then they introduced a land tax. So every state in Australia has a different land tax thing. I would love to see a reform where it's just one set of planning policy in Australia, one set of land tax, one set of stamp duty, but it's not right now. And so in Queensland, for example, if you're buying in your own name, the first 600K is land tax free. In Victoria, the second you start buying, you're paying for every dollar of property land tax. Now, that sounds scary, right? When the media grabs onto stamp duty, makes it non-affordable to buy there, and land tax is this new thing, and all of these investors are selling properties because they can't afford to hold them. But we did an analysis, Pam and our team, a couple of weeks back on a 750K buy in Queensland versus Victoria. And we found the difference in holding costs because, yes, land tax is cheaper in Queensland and more expensive in Vic, but rental management and rates are way cheaper in Vic than they are in Queensland. So the difference... Insurances. The differences ended up being about $500 a year in holding costs between one state versus the other. And I think when, like the mortgage cliff a few years ago, like we're going to hit this cliff, once the story of Victoria's bad, Victoria's expensive, Victoria has this bad government, this bad land tax, this bad stamp duty, and people just go, actually, that's a fucking house close to the city for 550K. It's just that people won't hear that until we see a 10% growth year in Vic, and a 10% growth year could be anywhere between 1 to 4 years away from today. So this is why we wanted to bring this video or this idea, this podcast out to people, because if you, like us, want early, this is basically like buying Brisbane in 2018, buying Perth in 2021, buying Sydney in 2012. Like if you want early, this is a once in a 20-year opportunity. And for anyone that's 40 plus, the only chance you'll have in your lifetime in peak income earning is to grab this shit while it looks like this, because it will not look like this for long.
And a lot of people, will sort of come back at that and be like, well, this time it's going to be different. Like this time, Perth is going to continue its growth cycle and beat every single growth cycle that it's ever done in the past. And Queensland and Brisbane, it's going to do the same. And look, I can see more of a case as to why Brisbane could with the Olympics and when the Olympics is coming. Based on history, it should drag out Brisbane's cycle a little bit longer. And it just causes so much speculation. We looked at what it did to Sydney, and it had a clear positive impact on property values in Sydney. And I would expect that to happen in Brisbane. But same with Melbourne. They're like, oh, but this is the new norm. Like this is what it is now. It's just like, I try to just chalk that up to recency bias and just go like, I have more faith in a longer term history than I do in a shorter term history, because we've studied it and it does have a funny way of repeating itself. Yes, in a different way, but it does have a funny way of repeating itself eventually. So I feel as though it's a little bit of a mistake to kind of take the last 5 years and go, this is the new norm, and disregard the last 30 years, disregard the last 50 years, disregard the last 100 years.
I like that so much. And one thing that you and I have both been drawing out for our clients at the moment to educate them is, if I had a blank piece of paper in front of me, right, and I just broke it up into 3 separate columns, and at the top of one column I wrote Queensland, like Brisbane, the next one Sydney, the next one Melbourne, and I wrote 12-year growth rates, 12-month growth rates, sorry, like 1 year, and then 3 year, and then 10 year. you know, because of this spreadsheet that we've created that's giving us access to these 4,000 plus suburbs a year and every market, we can directly compare where things are at. And what I've found is that most suburbs in Brisbane have done between 10 and 25% in the last 12 months. The data only looks like, from a core logic perspective, about 7 to 8%. And that's because it's capturing the whole pot, not the pot that's moving and boiling right now, which is the middle ring and beachside suburbs. And so if we did the same thing for Sydney, there's some suburbs in Sydney that have been really brutally smashed, and they're the expensive ones in the last couple of years. But some of the affordable ones have actually done pretty well.
Oh, Northwest Sydney, Southwest Sydney, Western Sydney, like they're kicking ass at the moment.
So let's say 5 to 15% in some of those suburbs in the last 12 months. And then if you look at Melbourne, -5 to +5%. So in the last 12 months, you know, give or
Neither
take
here nor there.
15%. It's irrelevant. But what shocked me when I did this analysis across the three markets is most suburbs in Brisbane that I like, that I've bought for our clients, have done between 50 and 90 or 50 and 80%, let's just call it, in the last 3 years. Most suburbs in Melbourne during the same time have done between -15 and +5%. And there's a few that have done as really well in the last 3 years at 15%. And, you know, Sydney's a mixed batch of everything in between that, because Sydney's just so diverse, and it's got these wealthy pockets and these impoverished pockets, and it's all just happening there. It's not Sydney's time, as we both know. Like, it's too expensive and the yields are too bad, and people that live there are too on the edge of like financial hardship for Sydney to keep going without international money. And so when I looked at that, I'm like, okay, the difference between a property 30 k's from Brisbane and a property 30 k's from Melbourne is about 70% difference in the last 3 years. That was the reason that I went, I really, really, really believe in this.
We're value investors and we're trying to find that value, and it just is clear to us when you've done as much research. So I'm going to throw you under the bus and go, let's say somebody's listening to this and, you know, they're maybe a first or second time investor, and they've got, let's say, a $700,000 budget, and they're like, okay, well, what is the best option for me in Australia right now? They want to hold the property for 15 plus years. They're in a good financial position. They can put down a 20% deposit, and, you know, they've got roughly a $700,000 budget plus minus 50 grand at the moment. Like, that's kind of the vast majority of people that I'm talking with at the moment.
Yeah.
And, you know, I'm always taking them through the path of, like, you know, option 1 Brisbane, option 2 Melbourne, and sort of mapping it out a little bit. But, you know, where
It's a
would
really
you
good
take
question.
somebody if they're in that situation?
So the first thing that I think most of us struggle with, myself included, as investors, is like, it's easier to figure out what you don't want to buy before you choose what you want to buy. So I look at Perth, right, and I go, Perth has doubled in 4 years, and I scratch it. And the reason I scratch it is because you and I know that Perth runs for about 4.5 years once every 20. After it finishes its run, and at the end of a cycle when the commodities boom ends, because the world isn't producing as much in a depression as it is in a boom, we get a mass exodus, which last time this happened, everyone went back to Melbourne because, oh, Melbourne 20 years ago was actually the most undervalued market, like, hint, hint.
Yeah.
But what happened then is that hundreds of thousands of people left the city, and vacancy rates went from 1% to 16%. And I was working and talking with clients 11, 10 years ago that were sitting on properties that had sat flat in Perth for 7 to 10 years, that had actually decreased from the top to the bottom by 35%, and that they couldn't find a tenant after they'd dropped their weekly rent from 800 to 500 a week for up to 6 months. So I scratch Perth out because it will only in the future represent about 8 to 12% of Australia's future population growth, according to the ABS.
And Michael Matusik indicates that Perth will be Australia's most oversupplied market within 5 years.
100% there. I was there. I just spent 2 months in WA, like I say recently, 18 months ago, or maybe even longer than that now. Everywhere I look, the city is beautiful. The city is so much more than we on the East Coast believe it to be. When people say that Perth's going to stop, hell no. Like,
No.
that is a vibrant, beautiful, diversified economy, but it is endless flat land forever. You could build to anywhere you want. Like, you could build to Broome, You could build to Esperance, you could build to the center of Australia, and it would never end. And builders are doing it because everything over there right now is being sold by off the plan people to East Coast or from Asia that are just building, 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 building. And so I agree, it's going to be there and it will pop. And so I've wiped that out. So I can't do Perth. I missed the boat. You and I both fucked up. We
Yeah,
didn't
licking
buy it
our
there in
wounds.
2020.
Yeah.
I knew it. We talked about it.
Yep.
Lesson learned. Next time it gets its 4.5 year run, we'll go grab it.
No doubt about it. Like, I love Perth, and I don't want to badmouth it. It's just like,
Beautiful place.
you know, Core Logic indicates that like the average property in Perth has gone up by 87% in the last 5 years now. That's the average property as well, which includes all the shit ones as well. So yeah, and it's just like that's very expensive knowing that like it's been a real good 5 year run now, and you know, it may generally in the past it's done sort of 120 to 130. There was one growth cycle where it did like 145, where it was Australia's top performing
It was actually more expensive than Sydney at one point last cycle.
It went nuts, but then it obviously had the major correction there as well. So that volatility just scares me. And if we were to rewind the clock, absolutely we'd be buying over there, but we can't.
And if you are an owner of Perth right now, go you. Yeah. If you are investing there right now, go you. Like when we looked at that 1970 to 2016 data set from Homely, Perth averaged 8.2% per annum. It's a phenomenal market. I just don't buy someone else's 90% gain. I won't do it. I have done it. I will not do it now that I know what I know. The next one is then Adelaide, identical story. Adelaide, again, I spent heaps of time down there, like West Beach, we stayed there for a couple of weeks. I love the city. So underappreciated for people like me that grew up in Sydney that are like, it's only Sydney. You know, and then I like Melbourne and Brisbane as well, but I'm like, Adelaide is so trendy, so cool, so much going on. But again, I'm not paying 100% profit from 5 years ago. And it is going to represent such a small piece of the long-term population, job growth and infrastructure pie that it's just not for me. So then I go, well, I don't buy, definitely don't touch Canberra personally. Something that I can't even own the actual right to the property. I'm on lease for 100 years, just doesn't sit well with me. And then Hobart has doubled as well, and so is Canberra. So it's like those two markets or four markets are just immediate no's. Then I go, Sydney's too expensive and locals can't afford it. If Sydney wasn't getting 100, 200,000 people a year moving there and the whole world speculating on it because it's Sydney, how would Sydney really be right now? Like, we've got friends that earn hundreds of K per year that are literally keeping their head above water and they're only in $1 million of debt. Like, it's scary expensive for the average person what the lifestyle looks like. And then I go, well, Brisbane, I love. Would I be liking Brisbane as much right now if there wasn't a 2032 Olympic Games? No. If this was, I left Sydney when Sydney looked like Brisbane 10 years ago, like Brisbane looks today, to come to Brisbane because Brisbane 10 years ago looks like Melbourne now.
And have you bought a property in Sydney in 2016, you would have crushed it by now as well.
Crushed it.
And, you know, I'm assuming that if we buy in Brisbane today and you fast forward 8 or 9 years from now, there's going to be a lot of people that will crush it. If expectations come to fruition, which is for some of the analysts from the AFR was saying median house price could get to 1.4 mil.
Now, if I didn't have exposure to Brisbane or southeast Queensland on the sunny coast, I would be looking at beachside suburbs or middle ring suburbs of Brisbane. And with your 700K budget, you say, or 750?
700, you know, stretch put 750 with a lower deposit.
750 is very, very difficult in Brisbane now. You can either buy, you know, 25 to 30Ks or 40Ks in the city as a renovator, 30 to 40Ks with something okay-ish. But that's very hard to do now at that budget. Or you can buy a decent townhouse anywhere you want. Like,
literally over the last 2 months, it feels as though that bottom end, that lowest end of the market has just gone up by like 50 to 100 grand. Like overnight, you know, I was having a chat to one of our clients last night, Hamish, and he wanted to buy in Brisbane, and we'd tried for the last couple of months, and like we were putting offers on at properties at like 760, and then the agent's like, we just sold it for $805,000.
It literally happened the second those first home buyers grants came in.
The second I sold my property.
Yeah, like I literally lost the property the other day, like 2 weekends ago, 54 offers. It was on for $695 and it sold for $805. And in one day, the market just reset itself by $110,000 because that's the new norm. So 174 groups through that property. Brisbane is on fire right now. It's not showing in the data. So with Brisbane, all I'd say is you need to know where the needle in the haystack is, and we do.
Yeah.
We've got 10 to 12 suburbs in the middle ring
Yeah.
and about 4 beachside suburbs, and that is all I would personally invest in if it was family or friends' money right now.
Yeah, I couldn't agree with you more.
For me, because I have so much exposure, because I've been buying up here personally for 13 or 14 years now, I have got my fill, even with the Olympics coming up. And when you look at the guys in the financial review, 800K properties going to 1.2 to 1.4 in the next 6.5 years. That's a 400 to 600K jump. And that's not normal analysts. That's the top 4 or 5 people from Australia's major banks forecasting. I like it a lot, but I can't help it, man. Like when there's blood in the water,
Yeah.
I can see what Melbourne looks like. Now, the thing that everyone listening to this has going for it is when the average analyst is looking at 10-year growth rates in Melbourne, they still look cooked.
Yeah.
Because 2015 and 16 prices went up in Melbourne by 50 to 70%.
Yeah.
But when you look at 8-year data sets, the average suburbs we're buying have done 2 to 4% a year. When I saw that in Brisbane, prices doubled, and Perth, and Hobart, and Sydney, and Adelaide. It is the number one thing that people miss that will predict the medium-term gains. And so you and I are looking at 3-year versus 8-year data sets now and going, it's not even an 8-year low. I believe it's a once in a 20, it's probably a once in a lifetime opportunity. Like it is, I hate to say that because I sound like every other real estate dickhead. I'm not saying because these people aren't even going to reach out anyway. Some will, some won't, but like start looking at it.
That's all we got to do
Start
as well
looking
is
at it.
like, we started talking about Brisbane back in, 2017, 2018, and it just
14, 15.
it just wasn't on the radar of people back then. And lo and behold, this is what happens. And we had an inkling of what was going to happen in Perth, but we missed it. And that's something that we've got to accept. That's a lesson that we've learned. No, never again will we miss that mining boom in Perth because it's just so lucrative. But now the data is suggesting that if you take all of the emotion out of it, all of the recency bias out of it, and you just diagnose the data and look at the longer term history, it's just clear that Melbourne and Darwin are the 2 most undervalued cities in Australia right now with the best, short, medium, long term growth potential. I would, cross out Darwin long term, but short to medium term, Darwin, Brisbane
People
look
make money.
insane. Even Perth in the short term is going to continue to run really strong. But Melbourne's just going to slowly pick up and that as soon as we see that double-digit growth year, that's when the narrative will change, the media will change, and people will start to find that confidence. But it's like property values from today to when we finally have that double-digit growth year. We could see a couple of
25 to 35% growth between now and then. Like it's weird. It's just a 7. It's just a 5. It's just a 9.
adds up.
And it's like, it's probably not 35, but it's like most people will miss 20 to 25% of the easy growth by waiting until it's winning. And winning, from mine, yours, and Ryan from On Properties, cutting up that data set, when we see a 10% growth year, the likelihood of seeing that in the same city the year after is about 70%, and the year after is in the 60s. So like when it runs, and it's just, we love winners.
Yeah.
Like we love betting on winners in Australia. We don't like putting money on.
No freaking wonder. We all work so bloody hard. Like nobody wants to waste their money, like investing it in the wrong thing. And that's why we're trying to say stuff like, don't go to the wrong markets if you are looking at a 10 to 15 year hold. Like if you're a short-term speculator, like do what you want. But like if you're a long-term value investor, then, that's why we want you to be aware. And if you're planning to buy something over the next couple of years, then educate yourself on Melbourne, because it's not on everybody's radar yet, but it will be eventually.
What I wanted to say here is just how important what you just reaffirm what you just said. So we've got one client at the moment, Brian. We're buying his 7th, 8th, 9th, and 10th properties. He's got a $1.5 million budget for each of them. He's like, I want 4 properties in Melbourne, either near the city or walking distance to the beach, worth 1.5 each. I want them to look like 4 5-bedroom homes on monster blocks. Now, I couldn't physically build the homes, couldn't build what he's looking for under 1.2 mil. That's what the homes look like. They're 600, 500 square meter homes that are double.
What every person wants to be buying.
Yeah, they're like, he can afford my dream.
Yeah.
If I could do what Brian was doing, I'd do what Brian's doing. Like everything that we did for him in Brisbane turned to gold. Everything that he did for himself in Perth and Sydney turned to gold. When, Brian's and Chris's and Kim's and Gus's come out of the woodwork, they are canaries in the coal mine. They're our clients that see value, that aren't afraid like me and you to buy when it is unpopular to buy. But some of these properties in the southeastern beaches, for example, in the Mornington Peninsula area, I believe are legitimately half the price of Sydney right now. And you're basically getting the piece of land for like 300 to 500K that should be $1 million for the block. Like when we go 40Ks north of Brisbane now, a 600 square meter block of land would be 500K, and we're buying them for that. And then we're building dual locks on them or duplexes. Like they're a great strategy up here. Closer to the city in Melbourne, I can get a 10 to 15-year-old home that's on a 600 block for fucking 650K. Like I'm getting the house that is worth 450 grand to build for 50K. These are the things that I see in the current market, or in some of these areas that are in the, like I would call like the medium ring western part of Melbourne. It's like so hot up to 695K, and the second you go to 750, you're getting an extra 150 square meters of home, an extra 200 square meters of land, and you're not competing with an individual. It just stops. And it's like, I've seen that in Brisbane, like that home in Brisbane would be worth 1.1, 1.2, let alone in Sydney, 1.5 to 1.8.
Yeah.
So when I see those things, I'm not just going, Melbourne looks statistically good. I'm going, this pocket looks undervalued. These 5 suburbs out of 90 in this council region look undervalued. And then this product looks undervalued. And when you take that approach, which is the pumped on property way, it's a different outcome medium term than average. And it should be, when we look back 7 to 8 years from today, a very, very, very special time to have looked at this market.
Yeah.
But it'll run, I reckon there's 5 to 6 years of good buying ahead for it, depending on just moving around to the right area.
Yeah, well, it generally runs for roughly like 8 to maybe 14 years in a growth cycle. 8 being very unlikely, 12 to 14 being far more likely. And then it normally only sits in a bad way for like 4 to maybe 8 years. And we're coming up on 8 years as well, which is why it appears and feels so undervalued at the moment, because it's been an extended drag because of all the reasons that we've talked about today. And so let's see.
Let's see.
Only time will tell. Everything is a lesson to be learned. Like, we don't have a crystal ball. We can't predict the future. We're just taking the information that we have and doing our very best to make the most educated decision. And because we're so passionate about it, because we care so much about, the money that we're trying to make ourselves and our clients, like we want to win. We want to stack 100%. Evidence that like you can identify the needle in a haystack. You can outperform the average investor. You can outperform the national average if you get so specific on how, what, where.
When I started investing back in 2011, there was this incredible company called Residex at the time, and they would produce the Australia's hottest suburbs reports, and you could buy them for each state in Australia, and I loved it. Like, I wish this dude was still doing this. They got bought out and then shut down. Like, they just stopped producing the reports by, I think it was by CoreLogic, actually. Effectively, what this guy figured out to do. So I'd buy this report, right? It's called the New South Wales report. And then it would have maybe the top 50 suburbs that they liked. And then I would go through and highlight the suburbs that I could afford, which were like suburbs under 400K at the time because I couldn't afford anything earning 55 grand a year. And then I would look for the suburb that had the highest expected growth rate. And like every gambler that calls themselves an investor, I'd go by that one. And I didn't know how he was doing it, but sometimes he'd be like, in the next 5 years, I expect this suburb to do 7 to 9% per annum. And every single suburb that I bought from his reports did that. Now, I didn't know how he was doing it, but he knew how he was doing it. And I figured out how he did it. And he did it based on a spreadsheet like ours, but it would have been way fucking harder to put together before
I know,
AI
right?
and coders
Yeah.
and doing things this
Automation.
way, automation. And he was looking at everything in Australia, and he was looking at historical 150-year, 30-year, 10-year averages. And then he was handpicking suburbs like Darwin. There are suburbs in Darwin that have done 0.8 of 1% a year for 10 years that have averaged 8% for 50.
Just remembering that inflation over the last 10 years has probably averaged like 2.5 to 3%.
Yeah. And in the next 10 years, it might do at least that. Like they reckon it's just a high inflationary period, which it needs to be because wages have to go
Wages
up
have to
relative
spike.
to expenses. We need wages to go up 50, 100%, and the cost of goods to stay the same so that we can afford to live. I went to the supermarket, $600 it cost me
Oh,
to do the family shop.
that's
I
wild.
was hungry. I shouldn't have gone hungry. But I was trying to get like organic stuff and good meat. And I'm like, maybe if I didn't do that, it would have been $450 for a family of
Yeah,
5 and all the pets.
it's still expensive.
I'm like, what if you're earning $1,000 a week? Like, I'm like, it is. So we need wages to go up. When people are like, oh, inflation's horrible, I'm like, inflation is hyper necessary right now. But this guy figured out how to do it. I think we were in Coolum when we really figured this out. It was the homely 46-year data set that you, me, and Ryan spliced and spliced and spliced with the longer term real estate cycle. And we went, oh,
It's going to get easier as well because like every year it's new, more evidence. Every year, you know, technology is improving and it's just going to get easier and easier to recognize these things. But what I believe will happen off the back of that is it's going to get a lot quicker. And I've realized that with Melbourne, because when we transitioned into Brisbane from Sydney, it took a long time, years and years and years for people to believe.
first parts to get on it.
But now it does appear as though like the tide has turned a lot quicker down in Melbourne. And that may be because of these YouTube videos and like everybody else that's producing them as well, and all of the online articles and all the different information that you can follow. And the fact that it is just so instant these days, it's all going to start to speed up more and more, which means you have to be the early adopter.
Do you know what? Because I've been doing a lot of the buying this year with our sister Crystal in Melbourne, and she and I went from nobody looking, like I'm talking about 2 to 4 inquiries on one beautiful property for 650K in a whole month, to 35 people. And now in the last 2 months, it's gone cold again, because if you look at the data sets, Perth, Brisbane, and Darwin have just spiked. And most buyers agents don't do this. That, or like, we will lose clients because I won't buy them Darwin or Perth right now. We lose like hundreds of people a year because I'm like, I don't believe in it. I want you to be in 70% early. I don't want you to be in 80% late. And it's hard to like, have those rules, but those rules mean that the next 7 years look phenomenal. And I think about all of these things, and I think it's an exciting world. And I think you're right. I remember going to a Michael Matusik workshop,
Masterclass, yeah.
and he said it's going to change the way that property works. It's going to go from flat to an insane spike to flat, and it's going to look more like a staircase versus volcanic peaks in the future.
Interesting.
What I have found now is that when we started to buy, like for example, the Gold Coast, we were so early in the Goldie 10, 11 years ago.
And Sunny Coast.
And Sunny Coast like 8 to 9 years ago, and then Brisbane 10, 11 years ago. I had 3 years to absolutely milk a spot before it got into like a homely hot suburbs guide, or before it got onto like whatever. And then we went from north and we went to south, and we thought we had 2 years, and it did. In 9 months, it just got hot. And then we went to west thinking we had 18 months, and within 3 months. So data online is getting better at finding where the early demand is and putting it in front of people quickly. Like, you can just look on realestate.com and you can actually go, where are the searches going? And you can see like the average searches in Queensland might be 400 per property and this suburb's got 3,000. And then when you overlay that sort of information against like this suburb's done 2%, but that suburb's done, 10% a year for 10 years, you can start to sort of, and AI is getting so clever at picking that up and then just, dumping it into the hands of people like me that want to find that info.
Yeah.
And we're not using the AI in that way, but we're using the things that we learnt from 15 years of traditional real estate and using technology to just make faster and better decisions. Like we used to redo our suburbs once a year, and that was more than good enough once every 2 years. Now it's like we're redoing the data set and the suburbs about every 3 months because something can get hot. And literally I've seen suburbs go up 200 to 300K in a year. And we have also seen suburbs go down 100K in a year.
Maybe it's because like stock market, crypto markets have been so volatile over the last 5 years as well, that people are just like, look, let's get out of that and let's put it into what we all know and trust, which is commodities, gold and silver and land, real estate.
Are you noticing like there's a lot of clients with crypto money going into property right now? Again, hey, it's sort of like, it's interesting. I'm doing it that much.
Like I've rinsed crypto and I obviously, like everybody else, wish I did more, but I'm pulling that out and I'll be using that cash to be able to fund, like improve my financial position to buy more real estate. I speculate on those types of assets in order to make my entry into property a little bit easier. I'll put a bigger deposit down, have stronger buffers in place, be able to add value to properties. So
it's interesting.
And I was talking to Chris on the weekend as well, and he's the same, like massive property portfolio, incredible business, and a real savvy crypto trader. But all of his profits from crypto are to fund his real estate developments and projects as well. I think that's just always been the case. Like you have a big win in the stock market, in the crypto market, in the business world, you take those gains and you put it into what you know and trust most, which is more often than not real estate. And obviously there's the traders out there listening to this, laughing and being like, you guys have got it all wrong.
And I do. I'm not getting 30% a year. Like one of our clients at the moment's in the Indian stock market making 30% a year for the last 10 years.
Yeah. But I look at the average managed fund in Australia that's doing 5 to 8% a year. And I can do that in property with leverage.
Yeah, I can 10 times that with leverage. It's interesting, as we talked about and had a laugh about a few podcast episodes ago, where you sort of looked at your position and I looked at mine, and I was about to make that impulsive decision to buy 500K worth of silver. As I spoke, the reason I didn't end up doing it, when I spoke to the guy, I said, I always ask the question to someone who's a specialist. He's the gold and silver buyer. And I said, what are you personally doing? And he's like, I'm selling all of it and I'm buying Melbourne property. And I said, when the dude that is selling me the asset that he believes in and knows is going into property, I said, I'm running in the wrong direction. He said, and I said, why? And he said, because between COVID and now I've made 300% on both of them. And I went, I need to stay in my lane. And my lane is leverage assets while I'm young to go into stable assets when I'm older.
It's a saying from Warren Buffett, like diversification is a hedge against ignorance. It's for those who don't know what they're doing. And it rings true. The more specialized you become and the more niche you are, the better you get at one thing. It's just like you're doing yourself a disservice by changing it. But there is a good case to suggest that you want a nice balanced portfolio as well.
Well, a lot of the guys that read the books or write the books on this stuff that we're looking at now, behind camera, in front of camera, are people that are managing billions of dollars of other people's money. And I started to think, like, why does someone like Ray Dalio have such a particular approach to investment strategy? And I went, he wrote that book for every man, but he isn't looking for every man to invest with Bridgewater. Sorry. He is looking for sovereign funds like Singapore or Iceland, or he's looking for the top 500 wealthy families from the last 1,000 years, or he's looking at all of the new money, or he's looking at the Australian government looking to invest their money. And he can't have a year where Australian government gives him $1 billion and he loses half of it because it wasn't well diversified. And then I go, well, Warren Buffett said to his team that to put 80% of his or 90% of his wife's inheritance, if she had have outlived him, into the American index because he couldn't find a better place to put it. And he believed his own team without him couldn't pick above the index. And so it's like there's all sorts of different things, but a lot of the people that I read for like most of the last sort of 6 to 9 years were extremely low risk because they needed to build moats around their $1 billion ideas or their $50 billion under management. I'm just a punter with a couple of properties that just wants to own his own home, that wants to work 4 days a week and wants to travel and have fun with my kids. I'm like, so many of our clients have gone so much further than us. I just want like a really simple little life. And so when Perth comes up, I just want to grab one or two.
Yeah.
Make 100% in 5 years.
Me and you have talked about it in Melbourne, like putting our money together, going buying, a couple of nice joints down there in the southeast and just sitting on it, waiting, adding a bit of value and getting out of it. Like, you got to figure it out for yourself. And that's why when you and I have these conversations, especially like the strategy pieces, it's like, where are you at right now? Individually. Don't compare yourself to anybody. Fuck keeping up with the Joneses. Yeah. Look at yourself and really have a think about, who am I? Where am I? Then where do I want to be? Like, where am I taking my family? Do we want to be driving Maseratis and Range Rovers and flying first class and going on private yachts in the Mediterranean? Then you're going to need to go freaking hard. But if you just want a nice, simple life, go caravanning, go on a surf trip to Bali or Indo every now and again, go on a snow trip to New Zealand or Japan every now and again, have a simple yet happy life. Like yesterday we sat down as a team and we were like, what does your dream life look like? And we looked at it personally and then business related as well. And like, everybody just wanted simple things. Like for me, it's like, I just want to have moments of joy. I want to be surrounded by love. I want to be able to do what I want, when I want, with who I want. But I know what my values are. I know what I need to create those moments of joy, and it's not much.
It's not 20 more properties that you can sell when you're 75. It's like maybe one more good one will do the trick, or two more, just because this is the sport that you're in now for fun.
We have this saying at the moment, it's just like less is more.
Less is more.
Less is more is something that we're living by at the moment. And obviously as investors, you want to make savvy decisions. You want to make smart decisions. You don't want to make a bad call and end up losing money. So like, you have to obsess about this stuff. And even if it is for our tiny little portfolios in the grand scheme of things, it's still like, that matters so much to me and my family that it's just like, I need to care as much as I do, even though it's such a small amount in the grand scheme of things. But it's not to me. It's so much to me.
I remember all of those hard combos I used to have with people that were living in Sydney and Melbourne, and those markets were going up 20% in that year. And going, look, the Gold Coast, Brisbane and Sunshine Coast look like this, and them going, but it's not working right now. And I'm like, I was never going to say like, trust me. And I didn't know how to say at that time really clearly, like, look at the 10-year averages and look at the long-term history. Because at that point, all I had was the ability to do the information, but it was before CoreLogic and Simon Presley and Michael Matusik started to pump out all of this historical data that we could actually go, hey, there's a pattern to this. It was before we'd found Phil Anderson, and I'm like, I don't mind if you like me or you don't like me, but what I will fucking do for you is pick the undervalued suburb in the undervalued area in the undervalued market, and you will make money in the next 10 years from this. And I shouldn't have said that because I didn't know that. I didn't know that they would make money, and I've more probably said you could have.
Thanks, history.
Yeah, what I was going for was like, if the future looks anything like the past, which is all property needs to do is a 5% per year compounded for 15 years, and your 500 grand is $1 million, or your $1 million is $2 million. And now that I do know the history, and now that I do have this spreadsheet that I've been dreaming about having this for 15 years, like I knew what it was, I couldn't find someone to build it. And it wasn't cheap to find a builder either.
Never is.
And now it's like, I know that Melbourne is the next one, wrapping all of this up. And I know the reason I'm going to and you're going to invest there, and it's for our families. It's for Fridays off. It's to work with less clients instead of more. It's to not put 60 bums on a seat at Pumped on Property just because people want to work with us. It's to work with a small number of legends. It's to take that surf trip a year, or, you know, the snow trip a year, or a couple of times a year for you. It's to be generous. It's to go to the charity thing that we believe in and like have a positive impact there. Like it's for my kids, like when they want to buy their first investment, or when they are in their 30s and they're busting their asses off with young kids and struggling and going, hey, I've just paid off your own home. Like the next properties aren't for my financial future. The next properties are for like the people around me to get shit together as well.
I love it, man.
And I'm heaps excited about it. Like,
I hope we're right.
I just want to take this snippet, which I keep saying about doing. Sam, we're going back to the 2016, 17, 18 videos, and we're going to get like a snippet of stupid shit Ben said together, because it needs to happen. Like, and I want this to be a video in 10 years time that we look back and go, remember that idiot talking about Melbourne? Or like all of the videos, I want to find the snippets of myself talking about how good Perth was in 2019, 20, 21. And I didn't do anything about it. Like, yeah, like I just in the garage, like sitting out the back with sunnies on, like in the spa, like all of those stupid convos that we used to have for fun, where we didn't edit anything and we didn't stop anything, and we just were so raw talking about the only one thing that I've ever actually been obsessed with, and that is data.
Yeah.
I'm not even that obsessed with property. I'm actually obsessed with winning the game of data in property. Like that's all I care about.
Your mind just works good like that.
Yeah, I'm just like, I like finding the needle in the stack of needles in the haystacks. Like I want to find that one. Clients don't even know we're doing this shit. We don't even educate them on it. Like, because it's too complicated to educate the 50 or 100 things you need to do. But,
yeah, it takes 15, 20,000 hours to get there.
But, you know, I'm trying to do it for them.
Yeah, exactly. Someone's got to do it. As I said yesterday, someone's got to do it for us, and we're grateful that you are doing it. And I just love it as well. And for me, it's like the why. Like, you know, it's the why to have a better life for yourself in the future. And it's like property's just the vehicle. You got to choose something and give it a crack. Not die trying, and not, you know, die not knowing what you could have become or what you could have done with yourself if you had have just been a little bit more disciplined, been a little bit more, made a few more sacrifices throughout that journey. And, you know, we'll see. Time will tell. Like, let's wait and see where things are at in 5 or 10 years from now. And maybe we'll splice up some of these videos from 2025.
I don't want to say on camera what I believe, but yeah, I'm excited to see what happens. And I'm so grateful, man. This was supposed to be like a 15
really
to 20
quick
minute
one.
check-in, but I feel like Melbourne looks good, and that's how I'll wrap it up.
Love it.
G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just want to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.